Welcome back, traders and investors, to the second segment of our show. But we have a trader guest come on. We got Nic Chahine, creating income with option spreads. And Nick, how you doing today?
Doing great, guys. Thanks for the invite again. Love being on the show.
Okay, just talking a little over before we get into any specific issues. We're just talking a little market sentiment here. Dennis made a good call. Yesterday's decline off the open. S&Ps are trading up 8. What do you have on your radar?
Well, first and foremost, we want to know that it's going to stick. Unlike yesterday, it stuck for like 30 seconds and then it puked all the way down to a pretty ugly day all around. This morning it might be a little different because it was Europe that's leading the way, and they, I believe, understand the Ukraine problem more than the Asian markets because they were the ones that were up on the day yesterday before the start. So I have a little more confidence here. Plus, the yen looks like it's dropping from the level that killed us yesterday, below that. So, and the 10-year is up. So all things are conducive to maybe this one will hold today.
Yeah, I tend to agree with you here. Definitely not as bearish coming in here today. Yesterday was just a nice setup there where I felt like there was some overhead supply and I figured they might come in selling it. Today, not the same story. Obviously, we had some lows. We've bounced nicely. So anybody that was looking to or short this market and didn't get covered yesterday is probably looking today and is like, even myself, I'm still a little bit short from what the put spread that I was talking about. So I'm kind of itchy here too and not loving the rally here from the short perspective. So I tend to agree with you. I don't think it's going to be a complete washout here today. What's on your radar for individual stocks there, Nick?
Yesterday I did something I don't usually do. I sold naked puts in Google, but they were leaps. I was banking on a big jump and just a couple of dollar increase there, and I'll just buy them back. This way, I figured I would give myself. So I sold some long dated Google puts,
Mm.
and Google. It's looking a little aggressive for me. As far it may have $100 in it if the markets settle down. Now, by that I mean because the biggest worry for me right now is Ukraine. It's not Crimea. Crimea's done. It's Russian, whether the world wants to admit it or not. It's done without firing a bullet. That was masterful chess playing there by Putin. But now they're giving him reasons to start getting into the rest of Ukraine because they're mistreating Russians inside of Ukraine, or so I'm reading. So then he'll have a reason to say, wait a minute, I have to protect millions of Russians inside Ukraine, and we'll start, chomping at the bit to start taking it
Right.
piece by piece. So that's my only worry. If you take that aside and the world feels better about it, Google didn't lose any way of making money in the last couple of weeks yet. It's been hammered, like you guys pointed. It's not in China, so China is not is not a threat to Google making money. So Google looks good to me, and some sort of a megaphone formation, third touch thing on the technical side. So I like Google. I sold some naked puts, and on the pop today, I may just buy them right back.
Yeah, your long-term trade is turning into a scalp there. I kind of like that. But I want to ask you because with your strategies, I know you clearly state what way you're leaning into markets, and yeah, obviously and rightfully so. You have been bullish here, but did you take some heat yesterday, or
Sure.
did you have to cover anything? I mean, did it get out of your risk parameters and say, hey, because as you and we discuss this all the time, most important thing about trading is taking a loss. Did you have to cover anything? And maybe you put it back on, but just the way
Yeah.
that you're trading, you're hitting a lot of singles and doubles and triples. You don't want to let a grand slam take you out of the game.
Absolutely. I did take heat yesterday. I had a price line position that got under fire. Did some maneuvering, so rolled it down and out and down and added to top. So overall, it's still a survivable trade. It all depends on today. So if today we settle down, I don't want it to bounce. I just want it to settle down. Then we're all good to go. So I'll answer that next week. But yes, positions get under heat. I mean, moves like the last couple of days are unusual. And being a credit spreader, meaning I put risk away from current price, regardless of how far you put it, when a stock moves 50, 55, $60 in one day, out of the blue, you're going to take the heat. And if you can't take the loss and if you can't book profits, then you're going to suffer in the long term. So you're absolutely right.
Where was Google when you sold those leaps? I mean, do you go to your charts on this at all? You just go by
Yeah.
feel, or what makes you pull the trigger on something like that? Because that
And what price did you
yeah,
like,
that
if you
takes
don't mind
some
telling?
that takes some you know what here.
Yeah. Well, it doesn't because I sold them the level I sold them. It's under 1,000. I mean, how much risk am I taking? That's another 15% from where it was yesterday.
So
So
you sold the 2015,
yeah, January 2015s. They're like 35 bucks or 34 bucks.
$35 for the
Yeah,
1,000 you got.
yeah, and I bet you today it'll be in the 33s or 32s. So that's $2-3 right there. Bam. If you have the margin, you can make it work. I mean,
Yeah.
Good point.
it does eat margin.
And you're looking at this like Google here obviously makes a ton of money here. The stock has just, been pretty much on fire. And if it ever came back down to 1,000 there, it's pretty cheap from, probably even almost looking at a valuation perspective, it starts to get cheaper down there at 1,000. So you're looking at it that the odds of it getting down to under 1,000 are pretty low. If it did get down there, maybe you'd want to own the stock anyway.
Exactly, and here's the thing: I don't need it to bounce. Yesterday's VIX was insanely high at one point, even though it went red at the end of the day, which is pretty bizarre. But in the morning, it was up 6% or something, which inflates the premiums. Even all else staying the same, it just inflates the premiums. And on a sell down, whoosh down like that, the premiums get inflated on top of that, just
Right.
based on craziness. So I took advantage of that and I said, what am I risking here? A dollar, additional dollar? It was like the lows of the day. And I said, I want to catch a knife. And that's the easiest knife to catch because I do watch it and it's been tumbling. And I've looked in the history in the past 12 months, 2, 3, 4, 5, 6 red candles that size have not been followed by more. I would need war in Ukraine for it to go down from here.
And
Yeah,
where
it's interesting that you do say that because I'm looking at the same thing. I was going to bring up the same point. January 24th and January 25th, or January 24th, I guess it was over the weekend, and January 28th, you had an eerily similar move here where the
Yeah.
stock broke down from 1150 and lost 70 points in 2 days. And what happened? 5 days later, the stock was back up at the highs. So,
Right.
I mean, I don't know if we're going to see that happen in this case, but you didn't see more than a 2 day move in that stock. And I'm always a big fan of the 2 day move and a reversal, and that's what we saw yesterday.
Right. I'm not a technician, but that would be my second touch of that trend line, like some sort of a megaphone. If you started from the big back up, you can see a megaphone formation. One touch was in the first drop somewhere around November, December. The second one you just mentioned, the third one yesterday. And every time it bounces up to the top end of the trend to the top end of the line, which is 1250, 1275. So I like it. As far as risk, that's as easy a risk as I can swallow at this point.
where would
I
you have covered that thing? I mean, would you? I mean, it would have been
this morning it would be an easy. Okay, I was wrong. I'll just cover it for a
good.
loss of $1, or make $2-3 really easy. So it was a risk. I wanted to do something. I didn't want to sit on my hands all the time. So I just said, you know what? I'm just going to do that.
Get dirty. Yep. And that's when it's fun when the markets are trading like that. You get the volatility.
And,
I just want to touch
and
with.
to offset that, sorry to cut you off, but to offset that, I sold a few call spreads in other momos, and just as if I'm wrong, I'll just
Those will help you out.
Yes.
What ones did you sell the call spreads in?
I sold some call spreads in Priceline, some for this week, some for next week.
Oh, okay. So fairly close here. What, if you don't mind us asking, what strikes were you looking at on those?
I'll share the ones for next week because the other one will affect the.
Sure.
Okay, 1340.
Okay, so way up. Yep.
Yep.
So looking up there, and basically, obviously, that's 100 points out of the money here right now. So you feel
Yeah,
like
but
it's pretty safe to sell this.
but that's a day and a half for Priceline.
Yeah, I know. That's true enough, actually, Nick. We just watched it fall from that level in 2 days.
Yeah,
so.
but what I can do is if I see it bouncing this week, I'll buy a call spread for this week to help me withstand next week or offset some losses there. So it just I'm just killing time.
Right. Now that's a good way to approach it. I see that that price line had a 1213.93 low on the 12th, and it got a couple bucks below that, but in the 1200 $1,200 stock, you gotta you give yourself a little wiggle room. Two more issues I'd like to cover before we let you go. When we were talking to you last Tuesday about Apple, you had some call spreads going. You thought there was a lot of open interest at the 540 level. It did pause at the 540 level, kind of settled back in for the week. Now you're kind of getting into a scary area here between 540 and 550. Are you looking to a rip up through these 10 points, or do you think there's going to be some rough going?
No way. I need a flying car for it to rip up. There is the sweet spot for this week, the way I see it. 530 is the start of resistance. 535 is equal resistance to the 530. So that's a band where it's a strong band of resistance. 540 is clearly the bears have the upper hand. 545 just as much, if not a little more,
Okay.
and 550 is still a wall. So for it to run up through those levels, it would need a headline. If they have an event and they come out with something other than that stupid TV thing they mentioned yesterday, which by the way is still in infancy stages, if it's even there. So I would still need a flying, proverbial flying car for it to go up there.
Not a high flying issue. I know you like to mess with these $1,000 stocks to get the juicy premiums, but if you could just take a look at Pfizer here, which has been ripping around pretty good. Had that crazy expiration on Friday, had that 32.50 open, came crashing down, and now you're coming into a nice area of support here at the 31.40, 31.50 level. Any take on this one, or is it too low price of a stock for you?
No, I can look at it. I mean, Pfizer. I used to trade it when I first started trading because it was the quality name to have in your portfolio. The one thing I don't like about Pfizer, well, actually, you know, it's butting up against resistance for a while, but the good thing about it is doing it from higher lows. So if one wants to argue technically, it might be able to break through the 32, 30, and get back to the highs that recently visited. But if I'm looking at it, it's also looking head and shoulderish E. Maybe not technically head and shoulder, but I always look at technicals in the spirit of it. It tried once, failed a little bit around, what was that, February 13th, and then it tried again to the peak of $33 and failed middle of or early March. And then it tried again at 32.50 and failed. So that's a lower peak than the middle peak. So maybe the bull's a little tired a little bit, but
It
if the
looks
market,
tired. I
yeah.
agree. Yeah.
Okay,
So
okay. I'm sorry. Go ahead.
so from here it's almost a coin flip.
Yeah, I like the support there, but just to end things up, I mean, so you're looking through some follow through from Europe. You have your positions on from yesterday. S&Ps are bumping up here, up against the highs. I mean, are you waiting for 5-10 minutes for a follow through up to 1860? Are you going to give it the whole day, or where would be a point on a decline here where you'd say, rut row, this is just they're marking them up from what they bought on the close, and you're going to take them back down. Do you have a trigger?
I'm going to see what happens to the yen and the 10-year because they seem to be driving the bus right now. Also, at 6 o'clock this morning, well, 6 o'clock my time this morning, there'll be some housing data out, which could throw us in the tizzy. Unless it comes out good, then it just may add to the fuel to the bullfire. But if I get any relief of any of my trades that were in trouble yesterday, I may just close them for even money so I can get out and sleep better tonight. So that's my plan. I don't have a hard line in the sand. I'm just looking at the whole basket. I'm not going to look at Netflix and Amazon because they have their issues, especially Netflix. Hey, do you mind sharing? Do you mind if I share a write-up I did about Netflix yesterday?
Oh,
I
go
heard
ahead.
you guys.
Go ahead. Go
Okay,
ahead.
I'll paste it in there before I leave. But Netflix has its own issues. You got mentioned it, but I do not have a hard line in the sand right now. I'm liking the yen level, and I'm liking the fact that the 10-year is holding up. And I'll look at the TLT and see what it's doing. But I'm taking cues from that. The one scariest thing for me right now is Ukraine because the West, in my opinion, I don't like to talk politics, but I'm just talking politics in the context of business. they're making a mistake. They're punishing the whole Western world because of an issue that we really don't understand. Russia started in Kiev, and there's a lot of Russians in Ukraine, and Putin may have a reason, a valid reason to be in there. And if somebody votes to be Russian, who are we to tell them, no, you're wrong, you got to belong to Ukraine? So I don't know. They're just inflaming the fire, fueling the fire.
Okay, all right. Well, thank you. We need that kind of macro talk and stuff. It's good. It gives us a different perspective on the markets. All right, Nick, we're gonna let you go here. We're gonna stay on for our next segment. Thank you very much. That's Nic Chahine, creating income with option spreads, and giving his opinions on the market. And we'll talk to you. We'll talk to you next week.
Thanks, guys. I really appreciate the time this morning, and I'll be listening to the show from now on.
Okay, thanks, Nick.
Okay.
Bye.